Hey everyone, what's up? Thank you so much for watching. This is Mitch Goldberg, and you're watching another live episode of Be the Boss of Your Money, because I want you to be the boss of your money, not your money to be the boss of you. What's up, everyone? Happy Monday. We have a very special episode, so stick around because we are going to talk about Robinhood investing. What's all the fuss? Is this just the dumbest, craziest thing? Is it an innovation? What's so bad about it? Hey, you know what? We're going to take a deep dive into this and we are going to solve this riddle once and for all. And you know something? My answers are probably going to be a big surprise for almost everybody watching. So you're going to want to stick around. Let's roll the intro and then we're going to hit this. We're going to hit it hard. And it is good to have you back. If we haven't met yet, my name is Mitch Goldberg. You're watching a live stream, live episode of a show that I call Be the Boss of Your Money. This is about personal finance, investing, and business. I would welcome your questions, whether you're watching in the live stream or in the replay. Hit me up. Today's big announcement is from the Federal Reserve. The Fed said they're actually going to be going into the corporate bond market and they're going to be buying individual bonds, kind of like your financial advisor. Hey, let me put together a nice diversified portfolio of corporate bonds for you. I'll do that for you, except I'm the Federal Reserve and I'm going to start with $750 billion because I have a printing press in my basement. By the way, diversification, it's a strategy that we use to reduce risk, to mitigate risk, but it doesn't necessarily protect your overall portfolio in a generally down market. So let's get into this. If you're a viewer of this show, you are going to want to stick around. We're talking about Robinhood, the investing app, which has literally revolutionized investing for especially the millennial generation. Hey, I was a millennial once. Well, I'm actually a Gen Xer, but I was of millennial age once, and I've got some very similar stories to share with you. So we're going to get into it. If you watch this show, you know, by the way, hit me up with your questions. Your words of encouragement would always be appreciated as well. And while you're watching this, consider checking me out on YouTube, Client First Strategy, because that's where I post all of my content. All of my video content can be found in different playlists organized very neatly on YouTube. So let's get into this. First thing we always do is we do a quick review of the day's market action. So we're going to do a share screen. The big thing is, starting last night, Sunday night, at about 6 o'clock when the futures open, right away, Dow futures down about 400. As the night went on, Dow futures were indicated to be down as much as 1,000. Today, we finished 157 points to the upside. A really good day because it was just a ho-hum, nothing crazy day. Listen, I have said this before many times. I would like some nice, steady, quiet, slow pace, low vol days where we don't have too much ups and downs in the market, because when we have these big ups, they're followed with big downs. So your hopes are built up, then they're dashed. Then we get these big downs and everything is lost. And all of a sudden we get built back up. And it's just wreaking havoc with emotions, with investor emotions. And that's the worst thing that can happen to you as an investor, because it means you can't stick to it. I'm not saying everybody, I'm speaking in generalizations, but you see the NASDAQ was up 1.43%. Russell 2000 was up 2.3%. That's the standout winner. The S&P was up 0.83%. Typically the NASDAQ, Russell 2000, there were slight differences. Actually, there were pretty big differences. NASDAQ has a big slug of the work from home stocks, the Apples, the Netflixes, the Amazons. They had a pretty good day today, but the Russell 2000 is different. You won't find large cap stocks in the Russell 2000 because it's the preeminent, most widely followed small cap index. But small cap stocks are typically more domestic oriented in terms of where the revenues come from. So when the Russell 2000 starts to do well, people are starting to think, hey, maybe the economy could do okay. Maybe the big worry has been that the states that are reopening are seeing a massive rise in COVID-19 cases and hospitalizations. So maybe, the Russell 2000 being up today is a bit of a bounce from last week, or maybe it's an indication that investors are still pretty comfortable with the reopening story. Okay, so let's go on from there. The Fed, here's the big announcement, by the way, from Jeff Cox of CNBC. The Fed has been previously buying exchange-traded funds, bond ETFs. I actually received a list of the ETFs that the Fed is buying. They're buying junk bond ETFs, liquid ETFs, et cetera, okay? And you know what? You know what's happening now? They're going to continue to buy. Here, it says right here, okay? I don't know if you can see that on your small screen. The program is the ability to buy up to $750 billion worth of corporate credit. That's a nice way of saying corporate bonds. That is a pretty big number, but it strikes me as kind of weird. Like, who's to say what's fair and what's not when the Fed goes out and supports individual companies? The idea is that companies need their debt to be purchased and managed, or else companies can't borrow new money. So companies can now borrow directly from the Fed. The Fed is the buyer of last resort, and it's buying trillions of dollars worth of securities, by the way. So the Fed is right out there buying along with us. Some say it's market manipulation. Some say it's important and vital support for the economy so that we can get through this and take the Fed's training wheels off. Only time will tell. Some people say that we're going to have so much debt to pay, we'll never get out of it, and it's a problem. And some people will tell you it'll never be a problem because the dollar is the reserve currency, and as long as we could pay our debts, who cares? I think we all know the answer. My answer is eventually we have to pay the piper. Let's talk now about let's take a look, last thing, at my watch list here, okay? If you want to know the first thing I look at, the easiest thing to give you a summary of what's happening in the day is you look at the 11 sectors of the economy, and there's an ETF for each one. So I put together a list of all 11 ETFs. If you want that list, send me a DM. I'll be happy to send you the list. No obligation on your part. And you see communication stocks led the way. I'm not really crazy about that, but listen, that happens to have a big slug of Facebook in that as well. And I think Google's in that too. So the point is, communications is not just state old AT&T and Verizon, but financials had a pretty decent day. Real estate, okay. It was a pretty eclectic group. Normally I would like to see financials and industrials and energy lead the day. That would be a pretty strong vote of confidence for the market and the economy. But today was a bit of a mix. Every sector was up a little bit. But listen, we could have had a much worse day. We were on track for a pretty lousy day until the news came out that the Fed's going to be buying bonds. So the Fed continues to buy, continues to support the market, continues to pump it up. Pump it up, baby. We're here to pump you up. And it's probably going to increase to the wealth gap that's in this country because people who own paper assets will continue to do well, while the rest of the economy, you can see, is in pretty bad shape. Eventually, those two have to meet in the middle. So hopefully the economy will go up as opposed to the stock market going down. But we'll see. Let's talk about Robinhood. That's the elephant in the room. I'm going to stop sharing the screen for a moment. Now, Robinhood, if you haven't heard of it by now, and if you maybe live under a cave, is a trading app. It's basically a brokerage firm like an E-Trade, a TD Ameritrade, but their pitch is a little simpler. Their website, which I've been on, is a lot sleeker, but it's a very simple website where you can buy crypto, exchange-traded funds, and individual stocks. Its real target market is the millennial market. And I'm at this point willing to say the zillennial market as well, because kids coming out of college today are basically Gen Z. So they're also attracting younger than just millennials. Look, I have a good amount of friends who are millennials, and I love these people. They are super smart. They have kids. They own homes. They're driving nice cars. They own businesses. They're C-suite executives. This generation has really come of age. They're snapping up houses left and right. Boomers, you should thank them for buying your house, by the way. Thank a millennial today for keeping the housing market going, okay? And now they're getting a lot of credit for keeping the aggressive part of the stock market going. So let's talk about the Robinhood app for a second and just give you a little bit of background. You could basically trade for free. There's no commissions to buy and sell securities on the Robinhood app. You don't even need an advisory account or fee-based account because why pay anything? They're letting you do everything for free. It's a free trading app. And as a threat to let's look at it this way. They're perceived maybe as a threat to the industry. A lot of people are knocking Robinhood, and as a byproduct of that, they're knocking the people who are using Robinhood, which are millennials. Oh, what do they know? Oh, they're making a big mistake. Oh, they're doing something stupid. Oh, they're being so foolish with their money. Oh, this and oh, that. Who is to judge? Listen, I was a millennial once. Actually, I'm a Gen Xer because I'm 53, but I was 30 years old in the year 2000 at the peak of the tech bubble, the internet bubble. And I remember what that day was like. Those were crazy, crazy times. And you know something? Lots of people were trading, and it wasn't just 30-year-olds. It was the 50 and 60-year-olds as well who got caught up. They were the dumb ones, the older investors. You know why? Because they were the ones who were close to retirement and who could least afford to take the risks that they were taking with internet stocks. It was people of my age at the time, my generation, who could afford it because we had our whole lives to make up for any losses. You see how that works? So fast forward to today, it's a very different sector. One of the popular things is this. And so, one of the popular things about Robinhood is this. They offer fractional trades. You didn't have fractional trading back in 2000. I don't think it's a fair comparison to compare what's happening right now with millennials and Robinhood to the tech wreck of 2000. I think the industry is much better. I think the regulatory framework is much better. And unlike the kids today, the kids of yesteryear and the adults of yesteryear too, okay, they were trading almost for free, $10, $5, $15, $6 trades. And that at the time was considered revolutionary. And, E-Trade was like a brand new, high-tech trading platform, not like a full-fledged firm, which, by the way, now E-Trade is owned or is being purchased by Morgan Stanley. Okay. I wonder how the Morgan Stanley clients feel about that they could get everything for free on E-Trade. I know they want an advisor, then they can have an advisor. If they want to trade for free, they could trade for free. Depends on the service level. We have to talk about that. That's a conversation for another day, whether or not you need a financial advisor. But definitely the people on Robinhood do not feel that they need a financial advisor, or at least they don't need one for all of their money, because it is a self-trading, self-help kind of firm. And the firm offers lots of educational material as well. And they do want to educate people. I don't think there's anything nefarious about Robinhood and what they're trying to do for the industry. In fact, they were perceived as such a competitive threat to the other online traders like Schwab, TD Ameritrade, and E-Trade that they all recently announced that they're going to be offering free trades as well. Why? Because they realize where their new customers, the millennials, are going. And you know what? Schwab is known for, and I see this because when I am sometimes quoted on CNBC about personal investor trading, Schwab and TD Ameritrade are more like, what are the boomers doing? And Robinhood is more like what the millennials are doing. I think that makes a lot of sense. So that is one thing. Another thing is you see a lot of people knocking Robinhood who were in my space, the advisory space in the industry, because maybe they feel that somehow Robinhood is a threat to their well-being. Maybe they see it as a threat to their income. I think it's kind of silly because the people who are trading on Robinhood, someone like me at this point might not have even been a financial advisor to them. The average age of Robinhood investors, of Robinhood clients, is about 31. The average account size is maybe a couple of $1,000s. I don't really see a lot of financial advisors taking on new accounts for a couple of $1,000s and then having to charge them commissions and hefty fees to eat into a relatively small account. Now, as a financial advisor, I know when I have bigger accounts, I can charge them lower fees because I have the economies of scale going. But with technology today, Robinhood has been able to do that. In fact, all of the discount brokers have been able to do that because that's what the technology is for. So I'm not knocking you, okay? And I wouldn't knock anybody that wants to use Robinhood. So I think you have to take a look. Now, you could say, oh, well, they're trading Hertz, and Hertz just announced that they're doing a $500 million stock offering. They actually said, in not so many words, that the investors will probably lose all their money because the stock won't really be worth anything until the bondholders and senior secured and unsecured debt holders are made whole first, because they come before shareholders in a bankruptcy. So they even said you probably won't get anything. But Hertz did get approval from the SEC to take advantage of the wide swings and lifting the price of the stock from about 40 cents. I think it's in the twos. It went up to the sixes. And this is what people are talking about with, oh, the millennials are trading these stocks. They're being so silly. First of all, Hertz is just one of many stocks being traded on the Robinhood app. And then you have airlines like American Airlines, Delta Airlines. Well, you know who the airlines are, and the cruise lines and the casinos. So now they've been given credit, but in a demeaning way of saying, oh, people have been saying the millennials have moved up these stocks. Look, I don't think Robinhood traders solely and single-handedly moved up the price of American Airlines or Norwegian Cruise Lines, for example. There was simply a massive rotation out of the work from home, stay at home, and pantry stocks into the reopening phase, reopening stocks, which favored cyclicals like airlines and cruise lines, REITs like, Simon Properties, for example, that owns malls, high-end malls. And it just happened to coincide with the money going into the Robinhood app and people jumping on that bandwagon. But that was a lot of institutional investors, a lot of funds were buying those stocks, a lot of investors who were not on the Robinhood app were buying these stocks or buying the exchange-traded funds that invest into these stocks. So let's not say, oh, they're crazy, these millennials, they moved all their money into airline stocks and moved the whole market. No, you know what? They sniffed out an opportunity. They wrote it. They were part of it. The timing was excellent. But they didn't. If there was no Robinhood, these stocks, in my opinion, would have moved up a lot anyway. It's just because they were oversold. Okay, are you blaming millennials, by the way, for the steep sell-off in airline stocks and cruise lines? Were you only blaming them for the rise in these stocks, or are you just blaming them because you were shorting these stocks and you got pantsed when these stocks took off, and then you had to buy them to cover your shorts? And then that forced the price up even more. Let's not blame the millennials. The millennials did not move, in my opinion, American Airlines and these other tech, cyclical stocks like cruise lines and mall operators. Casinos. It wasn't just the millennials. It would have happened anyway, in my opinion. And then they get knocked for the $1,200 stimulus check because there are a number of them if you go onto Reddit, and people talking about, millennial traders, Robinhood traders saying, hey, it's free money. I might as well try to make something of it in the market. And yeah, you could read stories about people who made a couple of bucks on their $1,200 stimulus check. But then other people say, oh, that's not what the check was for. The check was for you to pay bills. Excuse me. What are you, their parents? 30-year-old millennial is an adult. And when you were 30 years old, you were entitled to do whatever the bleep you wanted to do with your money. And so are the millennials. Not every millennial is throwing all their money into the Robinhood app, but that's what we do. We paint everybody with a broad brush. So people are allowed to do what they want. If they want to trade it on an app, more power to them. If they don't want to trade it on an app, more power to them. Really, though, you're going to knock them for that? What do you know what percentage of millennials who are trading in Robinhood use their stimulus check? You probably have no clue. I don't either, but I'm not going to sit here and knock people for it because, I'm not in the business of knocking people for what they do with their money. It's a free country. You're allowed to do with your money what you want. And I believe in, controlling what I can control. I control what I do with my wife, and I control what we do with our money. That's our business. It's not your business. Okay. So having said that, the overall thing that I'd like to share with you with regarding to the popularity of the Robinhood app is this. It's not the year 2000 again. You don't hear about, like in 2000, people were selling every mutual fund because Nobody was using ETFs in 2000, or hardly anybody, but people were selling all of their mutual funds in their 401k and putting it into mutual funds with the title or asset class of aggressive growth, science and technology, innovation, or the Munder net fund, if you remember that one. And that's what people were doing with their 401ks, and people were turning their 401s into 101s. That's pretty funny, isn't it? Okay, so that's what people were doing in 2000. I don't really see people moving their entire 401k account into just the stocks traded on the Robinhood app. As a matter of fact, as far as IRAs go, retirement accounts, you can't even open up an IRA on Robinhood yet. So take that. Maybe it's a good thing. Okay. Maybe, we don't want people rolling over their hard-earned $50,000, $100,000, $200,000 401k and blowing it up into speculative stocks on the Robinhood app. But that remains to be seen. But the fact is, there was way, way more excess and froth and speculation in the year 2000 than anything that I see now. Even if you take a look at like the crypto bubble that popped about a year and a half, 2 years ago, even if you look at that, that was still never as big as what happened with the NASDAQ tech bubble. Okay, so let's not get overly carried away. The other thing is that I don't think you're seeing this right. When millennials are trading on Robin, and I speak to millennials who are trading on the Robinhood app, so this is what gives me this information, because I speak to people. You see, I speak to people before I make a judgment, and even after I speak to people, I prefer not to judge because it's their business. You see how that works? So what I'm going to say to you is that the Robinhood app has really, in a lot of ways, become like the new social media for that age cohort that enjoys trading. To me, it's more like one giant learning experience, not necessarily millennials throwing all of their money into the Robinhood app. They're not putting all of their net worth, their safety, or their 3 months of expenses in the bank, or 6 months of expenses. It's a learning experience, and it's like a community. It's like a social media, and they talk about it. They text each other. They talk on Reddit. They do all these things because it's become like a social, fun thing to do. And once you realize that the Robinhood app clients, the investors, the traders, once you realize that they're more like a community than a than bulls running down, I don't know, the field, okay, whatever, over the cliff, right? It's a community, and people are learning. And what better time to learn and even risk pissing away some money than when you're young? When are you going to learn this? I mean, yes, I know there are some financial advisors who will say, oh, all of their money should be financial advisors. Nobody should invest on their own. It's not realistic. As these young people, become more sophisticated, have more assets, more needs, and less time and more questions, that's when they'll start migrating to financial advisors. Not everyone, but a lot, enough. And you, if you're watching this, you're a financial advisor like me, you just need to be ready. Keep putting out content, keep educating, don't knock anyone. There's no need for that. And eventually people will realize on their own they need help, and they'll come to you. Okay, so I've got a couple of other things here. Okay, so I think one of the most revolutionary things for Robinhood is the fractional shares. And here's another thing, and this is like the last thing I'm going to say with regard to, and I'm going to check for questions out there and see who's out there watching this. Thank you, by the way. Is that the fractional shares, back in 2000, because I keep saying 2000 because that's the comparison to now, you had to buy 100 shares. So if Lycos was $40 or eSpire was $30 or GST, I'm just going through like the names in my head. WorldCom, okay, Lucent, these stocks are $40, $50, $100 plus per share, and you had to buy shares. Like there was no fractional shares. So right now you could buy American Airlines. I'll put $50 into it. That actually makes a lot of sense, basing everything. It's almost like the decimal system. It's when you buy a fractional share. I'll put $800 into Amazon, or I'll put $50 into this stock and 100 for that. And that's what most people are doing on the Robinhood app. You haven't heard of anybody blowing up their own personal money. Oh, and there's Dave Portnoy from Barstool Sports. Yeah, listen, I think he's really funny. And he is the first guy who says, I have no idea what I'm doing. This is for show. He's having fun. There's no sports to bet on. There's no gambling of anything going on. So he's just pivoting, which is what a business owner does. He's worth like $100 million from what I understand. He's trading with a couple $1 million. He says he's made some, maybe he's lost some. He's not gambling his whole net worth away. He's just basically banging. He's got a hammer and like a cymbal, and he's got a bell. He rings the bell when he makes a trade, and he talks and he schmoozes and people watch him. It's almost like watching a gamer, It's like watching a gamer, play Fortnite. What's the big deal, right? Overwatch. I have kids. I know this stuff. I'm hip. I am hip with this stuff. Okay. Let me go take a look and see who is out there. So those are my comments on the Robinhood app. It ain't so bad, folks. Let's stop knocking it. It's a giant learning experience. And these young people on it, and I still consider myself young, if I may say, but the young people on it, everyone has to go learn the lessons for themselves. Like every generation has to learn how to parent all over again. That's just the way it is. We've got a couple of comments out there. Let's take a look. Okay, Howie's out there. Bulls and Bears fighting it out today. You know something? They are fighting it out. That's what makes it fun. Yeah, it's what makes it interesting. Your hard-earned dollars. Hey, did you see the Guns N' Roses note I put out? I call this the Guns N' Roses stock market, Howie, on Friday, the last email I sent out. Not free. Okay, so you know what? Maybe this is a good time to say how Robinhood makes its money. Robinhood makes its money a couple of different ways. They get paid for order flow. They get stock rebates. So they're sending their orders to various market makers who in turn give them a tiny portion of money in return. They also have what's called the gold level accounts, where you could go on margin and you could borrow up to $1,000 to start. So they make money from margin. That's what people borrow money to trade stocks, and they make money on that. So yes, it is no commissions, but don't think that Robinhood is altruistic and doing everything for nothing. I'll show you something real quick. We've got a couple minutes. I'll show you. We're almost done. Show you this on the Robinhood app. This from CNBC. Robinhood is raising new capital at an $8 billion valuation. This is from this past April. So this is pretty new. Okay. About 2 months ago, an $8 billion valuation. They did not get there, folks, by being a charity. Okay. They are not a charity. So they make money from margin. They make money from when you buy and sell. They make little bits of money depending on where they route their orders. And it's not a lot, but what they're looking to do is make it up on volume, obviously, and keeping their expenses low by relying on technology and not humans. It's their business. Okay, so let's see who else. Other comments out there. We've got Howie, millennial You're calling me a millennial apologist, dude? You're not. You're practically a millennial too. See, but anyway, seriously though, I don't knock anyone. Every generation makes their plays, their calls. The boomers shaped the world. The Gen Xers, we thought we shaped things in the 80s and 90s, but we're not really big enough as a generation to do it. Millennials sure are shaping the world. And you know what? Where do you think my business growth is coming from, right? Millennials. We have Mark out here. Hey, Mark Keating, what's the best stock to buy today? Mark, I would love to talk to you about individual stocks, what to buy and sell. However, please forgive me, but I don't use my live streams to make specific recommendations on individual stocks, but you are welcome to reach out to me, and I'd love to talk shop, okay? Hey there, Schizo Silva. Hey, good to see you, man. Thank you very much for joining me. Still got them ACDC tickets. I would love some AC/DC tickets. It's one of my favorite bands. Okay. Elliot is out there. Elliot says, great show today. You know what, Elliot? I hope you're still out there. Elliot, you're the one who gave me the idea for this topic because of our conversation on LinkedIn. Okay. Just want you to know. Great show today. Also think Robinhood is a great learning experience as long as the customer doesn't go in too deep. Look, there are going to be a few people who go in too deep. Most won't. Hopefully everybody learns a valuable lesson and has a good time while they're at it. Thank you so much, everybody. I will see you tomorrow.